Hey everybody, my name is Mark Yegi, and if you haven't been to my channel before, welcome to @coveredcalls. Welcome to the Cash Flow Machine, which is the program that I teach. And I'm on this channel just to kind of educate. I don't want you to copy what I do. I want you to kind of learn from what I do. If you copy, we're not the same. Like, you're different from me. I know your eyes are a different color than mine, right? You probably have more hair. So you are a different person. That means you have to have a different trading plan. But you need to have a trading plan. You're going to hear me say that a lot. This is going to be the first video in my Apple series. I don't know how long it's going to go. It's going to go until it goes. And then the idea is that I'm going to show you how to make reliable income of 1 to 2% a week. And we're going to do it on Apple this time. This could be one video. This could be 20 videos. This could be 80 videos. I don't know. I just had a MicroStrategy series that's actually still going on. It's like 36 or 37 videos. God help you if you got to watch me that long. But anyway, here's what we got going on. I'm looking at getting into Apple. Now, I have a whole system that I teach people how to do, but I'm just going to kind of give you the overview of what it is. And if you want to go deeper, you'll watch more of these videos and you'll kind of figure it all out, or you could take one of my courses or join a program or whatever. But I'm not here to talk to you about that. I'm here to talk to you about Apple. I haven't been in Apple in probably like 8 or 9 years, and I think it's time to get in Apple. And the reason I'm saying that is not because I think Apple's this phenomenal company. Quite the contrary. I think its growth is slowing. I don't see really great products coming out. Their vision thing was good, but nobody bought it. Like, I see some problems with it, but it's Apple. Like, I don't see a world without Apple in 5 years. So that's why I'm looking at it. It does have some growth. It's, gaining in earnings. It's got what my friend David and I call revenue fingers, okay? And so it's not just phones, but it's phones, it's subscriptions, it's Apple Music, it's Apple TV, it's iTunes, it's the computer, the Mac, the iPad, like everything they do, they just keep building on that ecosystem. I'm sucked in. I'm wearing an Apple Watch, and I got the really cool Apple AirPod 2. There's awesome. So the bottom line is I like Apple. All right, now you're not here to listen to me talk about how much I like Apple. Let me show you what I'm doing. So the first thing I do when I start looking at a stock is 80% of the analysis is fundamental, and 20% is technical, meaning the chart. So I always start with a weekly chart, and I look at the left side of my screen. I have this really great program called Market Surge. You don't need it. Once you figure out what stock you want, you don't need it, but it's a great program if you want it. Anyway, so you can see I'm a big growth company guy. So I like the stock to go from $6.13 to $6.75 to $7.33. It's not gangbusters growth, but it's growth, okay? If you look at this little blended earnings per share growth rate, it's about 17% a year in earnings. I like companies that build profit, right? Look at the return on equity. It's 175%. That is, how well is the company handling your money, okay? In this particular case, it's 175%. When you discount it it's a high debt company, but I know they have a lot of cash, but they still borrow money. You have to discount that 175, but still, I like 10 times less than that. I like at least a 17 ROE, and we have that here. Let's take a look here at the bottom of the screen. You can see there's a small double digits of earnings per share growth and very small single digits of sales growth. Still, it's Apple. Now, I sell covered calls, so I like I like a stock that pays a lot of juice, which you'll learn about, but I also like a stock that's got good fundamentals and it's got a good chart. Let's go over to the right side of this screen and I'll show you. Look at this chart weekly. I mean, this is lower left to upper right. Now, it's not gangbusters. It ain't NVIDIA going up 3, 4, 5 times, right? It is an SMCI, going up 500%, but it's Apple. It's gone up, like a double in the last year and a half or whatever. So you can see from the beginning of this, which is in 2020, an $80 stock, it's now 4 times that, trading at around $240, right? Was that 4 times or 3 times? 3 times that. Okay, still pretty good. But taking a look at the last year, here we have, we go back in here, and stock was about 180, and now it's about 240. So it's 33% higher or so. So it's got a good looking chart. Now I want to zoom in on the chart a little bit and go to a daily. So let's look at that. This is the breakout spot on this chart, okay? This is a breakout from a consolidation. It's a pattern that I normally use. Most patterns are consolidations. Here's a slight breakthrough from an early entry above that downtrending line, so I like that. Plus there's the day before, yesterday, was a good volume save. I call it a save when it goes over the 50-day moving average. So it saved the 50-day moving average. It's above the 50-day moving average today. Not by huge amounts of volume. I'd love to see more volume, but okay, whatever. It's Apple. You can't predict these things sometimes. And what I'm trying to do is put together a painting, right? A painting is made by lots of brush strokes. And you don't do one brush stroke and go, oh, there's your painting, and you can know what it is. But if you put a lot of dots on a screen, like a pixel screen, or if you put a lot of brush strokes, now you start to see the painting. And so all these things are leading me to the painting. So my goal is to get in somewhere around this swing point. Well, that's 247.19, and it's coming up off the 50-day moving average, and it's above that line. There's a bunch of good things that are happening. So I'm going to pick up some of this Apple at 244, 245 where I can get in. But I'm not going to jump in my entire portfolio. I'm going to ease into this portfolio, and I'm going to sell calls against it to get a little bit of a hedge and get some odds in my favor. Make sense? Okay, so now let's go to the next screen, and I'll show you how we do that. All right, so I want to show you what I have on this page. It's called a trading plan. This is my Apple trading plan, and everybody should have a trading plan, but most people don't have one. Every good trader has one. I'm not saying I'm a good trader. I'm saying I give it my best shot and I have a system, but it seems to work. So here's my Apple trading plan. My entry is going to be that 247.19 that I showed you. That's that swing point, or a little bit earlier. Like I feel like I'm getting a pretty good deal here, so I'm getting an early entry. It's got to bounce off the 50. It's got a crossover positive, which you'll learn later. And the target that I'm setting, based on some past movements on the stock, is that it could go up $100 from here, roughly, or maybe 80 from here. I think it goes to about 327. That's where I see my projections moving this stock to. Now, every trade, you should have your entry, your target, and your stop price. When do you get out? Because look, we're not Nostradamus. We're not trying to predict this stock. We don't know where it's going to go. I got a 50% chance that it goes up and a 50% chance it goes down right now. So the stop is a crossover negative, or a 221.96 price. Now that's $1 below the 200-day moving average as it sits today, whichever is first. So if I get one of those two triggers, I call it a circuit breaker, I'm out, okay? Because it's worse to stay in a stock that you're trying to just tread water. It's better to get out and come back in when it's green and it's ready for you. Okay, I have a system that uses 4 cornerstones. You buy the right stock. I think Apple's the right stock. In the right market. We're in a green market. I have a market timing system that I use. It's right about 75-80% of the time. At the right spot on the chart. Well, we got an early entry, okay? The right spot on the chart officially is all the way at the all-time high. We're trying to get it a little bit earlier here at 247 or 244 or whatever it is. So we're getting an early entry, so that's reason to get in, but not all the way in. Green market. Green stock, here's what I'm going to do. I'm going to sell half of my position at the money and half out of the money. And my goal is to collect the juice, and I'll show you what that means in a second. If it's a yellow market or a red market, or a yellow stock or a red stock, I'm going to sell half at the money and half in the money, okay? If you don't know what I'm talking about, just hang. I'm going to show you how this all turns into reliable income. I'm not going to have exposure during earnings. It's a number one rule of mine. Defend my position when possible, which means it's a roll down strategy that I use. You'll probably see me when I do it if I have to do it. I use the 75% guideline, which means when I get most of my juice early in the week, I'm going to take it. So that's my trading plan on Apple. Everybody should have a trading plan, including you. If you don't, sit down right now and write out a trading plan for something. And by the way, don't copy me. Learn from what I'm doing. Try to understand what I'm doing. Do your own thing because we're different. Okay. Here we go. Okay, so now I've made my decision that I want to get involved with Apple, and I want to probably eventually have 800 shares of Apple. But right now I'm just going to start with 400, just so you can kind of get an idea of what's going on. So it's real easy to do. You click anywhere up here where it says Apple and you buy, and so it shows the order bar down here on Thinkorswim. That's the platform I'm using. So I'm going to change this to a buy. And this should be 400 shares of the stock at the market. Confirm and send. Okay, I got an execution. So you always want to check and make sure the execution happened properly. So you got 400 shares of Apple. I picked it up for $244.21. And so that's about $100,000 position, 97.7. So that is what I call my base position. Okay, now what you're seeing in front of you, it's what's called an option chain. Every stock has an option. Now, real quick, an option is the right but not the obligation for the buyer of the option to do something before a certain date. The right but not the obligation. For the seller of the option, that's what we are, we have the obligation if the buyer wants to do something. So for example, if the buyer we buy this $250 strike price, okay, which is the price that the contract is written for, we sell somebody the right to buy our stock at $250. So we give up the right to over $250 to make money. What do we get in exchange? We get this extrinsic value, what I call the juice. So that's $77 per contract, and a contract is 100 shares, okay? So that's essentially what we're doing. We're not the buyers of the options, we are the sellers of the options, okay? Now, we want to be the sellers because I think sellers are smarter. 80% of options generally expire worthless for the buyer, which means if you're on the other side of that trade, you have a good chance of making a good amount of money. Now, in my system, we always collect what I call the juice. That's this extrinsic value column, okay? Now, we want to collect the juice. You saw my trading plan, the market's green, so what we're going to do is we're going to sell half of the position, 200 shares, 2 contracts, right, at the money, and 2 contracts out of the money, okay? At the money means I pick up $205 because the stock is right now at $244.32. So at the money would be closer to $245. We're going to pick up $247 per contract, or $2.47 per share. It's not as good as some of the other more volatile stocks, but then again, it's less volatile and it's a little more predictable, so I'm happy to do that. So what I'm going to do is I'm going to sell 2 contracts at the money. These 245s are pretty close to at the money. If there were a 244, that'd be even closer, but I don't have that. So I'm going to go and sell. You know what? In fact, I'm going to sell them all here. No, I'm not going to do that because I'm going to be true to my trading plan. See that? So we're going to sell those contracts. You could also click. We're going to sell a single one, and we're going to sell. Oh, I came up with a buy. We're going to sell. I'm going to change this to a 2 contracts of the 245s, and we'll call those at the money. Okay? So we're going to do a market order, confirm and send, okay? What we're also going to do is we're going to do 1 strike out of the money. Now it's a little bit weird because it's, a strike and a half out of the money, but I'm trying to show you that I'm sticking to my plan here. So we're going to go over here and going to click on the bid, okay, right mouse click, sell a single call. Didn't work, didn't build it right for us, but there's the sell. 2 contracts of the February 21st 247.50s at the market. Got it? Confirm and send. And now we're going to go back. We got the fill, and we're going to go back and check how that worked out for us. Okay, so you could see there's our 400 shares of Apple. Okay, that's money we take out of our wallet, but coming back into our wallet are these two trades. Okay, so we get net liquidity of $293 back in. In other words, we made $146 per contract in juice. And on this one, we made $250 per contract in juice. And those 4 contracts bind us to what the strike price is. So if somebody that bought those contracts from us, when we got the sale, that's our income, they come to us and say, hey, listen, I want to buy I'm going to give you $245. You have to give me your stock. Well, we have to give up our stock, okay? That's not the end of the world. It means we probably made money because it went higher. The same thing with this 247.50. Now let's flip it around for a second. If somebody paid us just now $145, right, for 100 shares, okay, that means this stock has to go to 247.50 plus $1.45, which means it's got to go up to about 249, right? So if the stock goes to 249, that person breaks even. But what if it doesn't go up? We get all the money. We get this whole $145 per contract, or $1.45 per share, okay? So there's less of a chance of it going in the money, but we always get the juice. Now notice the higher the number in a call option means the option you want to go up. The higher the number, the less juice you get, okay? That's this extrinsic value column here. And one final thing that I'll say here is that we want that juice to expire worthless, which it does every week. It starts where we just got it, and as time goes by, because time is valuable and time works against the buyer and for the seller, us, as time goes by, we get more and more and more juice until next Friday, a week from today, where we get all the juice if we wait till 359.59 to do it. Make sense? So that's what we do. Is this is initial trade. I showed you how to set up from fundamentals through technicals, setting up a target price, a stop price, and an entry price. And now what we're going to do is we're creating that income using the options against it. So stick with me on this playlist. It's going to be an Apple playlist. It's going to be fun. I'm going to be teaching you stuff along the way, but please don't copy me. Just do your own thing. And by the way, I'm not here to try to make predictions. I don't know if Apple's going up or down. I'm trying to play the probability. So don't make fun of me. Oh, you sold too early or you bought too late or whatever. Like, I don't care about all that. You know what I care about? The juice. You're going to hear me say the juice a lot. You're going to get tired of it. I don't care, because that's what it is. It's extrinsic value. What sounds more fun, extrinsic value or the juice? I like juice. I'm not a lawyer, so I don't like extrinsic value. That sounds like a fancy lawyer term. I'm a simple guy. I like the juice. Bring me the juice. I want the juice every week. That's what we're going to get. And I hope you enjoy this series. If you do, subscribe if you're not a subscriber to this channel. Share the video. Tell your friends. Comment. I love when people give me great comments, especially when they're positive. You can give me a thumbs down if you want, but tell me why you're giving me a thumbs down so I can get better. And this is just an educational channel. Don't do these trades on your own. Don't blame me if you do them and you screw up, or you don't screw up, or you like. If you make money, I'm not going to even ask you for a commission. I won't. I'm just not going to do it. And if you lose money, you can't ask me either. Okay? You're a big boy, big girl. You trade the way you want. Anyway, we are going for safe, reliable income of 1 to 2% a week. That's our goal. If you think about 1 to 2% a week, that's 50 to 100% a year. I'm not saying we're always going to get it, but we're always going to get the juice. That's always going to be your income. And when you put all that together, it's a pretty darn good trading plan. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below, and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.